We've spoken before on many of our podcasts in the past. The number one reason deals don't get done is the financial performance of the business, and depending on where you are in the process of selling the company, you can either pull back, or if you're deep in the process, you try to find a solution that works for both parties. On today's big hurdle, we're going to talk a little about a company that we're working with right now that, they're missing their numbers and how we resolve that. So welcome back to our podcast, The Ins and Outs of Selling a Business, this week's big hurdle. And, the financial performance issue is always out there, right? We're constantly addressing it as we go through the sell, right? We're asking our clients for their trailing 12-month income statement. Buyers continually asked right up into close, what's your latest financials, what's your backlog, what's your pipeline, all these things play into it. So, recently we're involved with a deal still going on where our client unfortunately is missing their numbers. Missed them in 3 months ago, missed them 2 months ago, missed them last month. It's not like the business is going away. It's just some, what I would call, operational issues, lack of certain equipment and or personnel to get the product out the door. So, and we're deep into this, right? We're not like we just started due diligence. I mean, we're down. We're legal teams are involved. So the parties are spending money, right? They're invested heavily in their advisors, whether it's the CPA doing the transaction advisory work, the legal work, the environmental work. The benefit, you name it. We are down to crossing the T's and dotting the I's on the final documents to close the deal. So, we had our weekly call with the buyers 2 weeks ago and on this deal. And they said, hey guys, can we speak to you offline? And so, they and I knew what the conversation was going to be. I mean, I've been around doing this for 24 years, and I knew they were going to want to address the sales price, what's paid at closing, what the earnout is, however the deal was structured. So they called us up and they came back and said, look, you know what? We're having a little concern about the performance of the business. We still want to move the deal. We still want to honor the purchase price as a whole. But, it's not only our decision, right? Our lenders are looking at this deal because we're financing it. It's very rarely that a company does, you may get paid cash all at closing, but the buyer's going to their lender to provide some of the capital to finance the deal. It's the way deals work, right? So we got on the phone with them, and it was an open conversation. We recognized the issue. Our clients knew there's an issue here, and so they made a proposal. So we want to kind of do X and Y. How does that work for you guys? And I said, we'll take it back, right? We don't react. It's not our final decision. We have to get on a call with the ownership of the company in this case and say, this is where they're at. This is what they'd like to do. How do you want to counter it? And they were open to a counter, right? It's not like they want to drop the purchase price again. It's like they're just keeping the price here, but the components of it are going to change a bit. So we went back to them and we thought we were creative in our approach, right? We kind of adjusted some of the purchase price at closing. We adjusted a little bit of what the seller note was going to be on this deal because that was already part of it. And then we put a little bit in what we call an earnout, right? That valuation gap. So instead of getting paid at closing, it wasn't maybe less than 10% of the purchase price, but we moved it into a contingent payment, right? If you hit certain profitability numbers over a 2-year period, you get paid. And we also gave them a little break on the rent that they were going to pay. So from a cash flow perspective, because they were concerned about cash flow of the business, because we're not making our numbers, right? And we proposed that to them and it worked out, right? And so we also kind of put a factor in that if we don't make the earnout in year one, but the aggregate of the profitability over a 2-year period is the same, then we get the full earnout. So, it's a very, what I call stressful time for business owners when, because they're counting on a certain amount of cash at closing, but, the numbers aren't adding up, right? So, when you're looking at a deal, there's various factors that affect it outside of just, I'm selling my company for 10 million, 20 million, 30 million, right? It's all based on, the performance of the business, what the outlook's like, various other factors. And sometimes those come into play, like I just said, that is going to cause the buyer to give pause. And when you're really invested in a deal, I mean, we're talking, when you're down to the end of the deal with legal documents, both parties are significantly invested. And there's a transparency trust factor that has to be maintained between both parties. And as long as you're above the board and consistent with that conversation on both sides, the buyer and the seller, then, you'll find a workable solution. In this case, we were very fortunate because we were very transparent from day one. They knew it. They were open with us. We've kind of, we invited them into the business to learn more about it. And, there was a good working relationship between the two parties. And I can't emphasize that enough. If you have a willing buyer and a willing seller, you'll find a way to get a deal done. And it really comes down to that trust factor, right? That these are the right buyers. They can get this deal done. We're open and honest both ways about it. Let's find a solution. It wasn't like a conversation, and unfortunately, I've been in a few of those where way back when in some deals where we were skeptical of what the buyer's intent was, right? What gave us pause. This was a situation where everybody's been working consistently as a group together to get this transaction done to the benefit of both parties. And we found a solution that worked. We didn't accept exactly what they proposed to us. We tweaked it, went back after lengthy discussions with our ownership group and says, does this work for you? And if that works for you, then we'll get on the phone and we'll talk to the buyer. And we worked it out. And the good news in the situation, we worked it out. Hopefully the deal is going to close in another within the next 30 days and will be a great announcement. And it will be a terrific transaction for my client, the buyer, the people who are staying on with the company, moving it forward. And we move on to the next stage of it, integration of the business, and everybody's going to be happy. So, I can't emphasize enough that, when you get a situation where there is a performance issue on your financials, raise your hand right away, present it to the buyer. Hey, here we are. No surprises. They want to get the deal done. You want to get the deal done. As long as you're open, honest, and transparent about it, you'll find a way to get the deal done. Again, my name's Keith D., President of Osage Advisors. To learn more about our firm, please visit our website at osageadvisors.com. If you have any questions, feel free to email me at kdee@osageadvisors.com or pick up the phone and give me a call at 860-767-3273, extension 1001. Thanks again for being with us on the Ins and Outs of Selling a Business, this week's Big Hurdle, and have a great day.